Thanks for joining us. I'm Marlon Bowling with you, and we're going to take a look at the latest USDA quarterly stocks numbers that just came out moments ago. We've been talking about it all morning long, and we're going to welcome a little extra analytical help from Todd Bubba Horwitz of BubbaTrading.com. He's located in Chicago. All right, let's take a look at some of these numbers here, Todd, as far as the quarterly stocks numbers go, and they just came out from USDA mere moments ago. So here we go, and the trade is reacting to all this. So the trade was expecting to have corn stocks at 2.436 billion bushels. Well, this was a bit of a surprise. 2.114 is where it came out, quite a bit lower than what the trade was expecting. And we had soybeans coming in at 913 million bushels when the trade was expecting to see 980. And the wheat had 2.385 billion bushels when the estimates by the trade were 2.318. So that one was a touch heavy there. But boy, the reaction, if we take a look at our corn and soybean prices right now, just immediately we had a knee-jerk reaction to the upside. We have December corn up 7 3/4 right now. We're at 379 1/4. Look at where we got earlier. We got as high as 384 1/4 and backed off of that already by a nickel. If you look at the soybean trade, right now you have November trading 16 higher at 8.99 per bushel. If you check out the high, it got as high as 904 right after that information came out. And there again, it has backed off of that by a nickel already. On the wheat market, well, the wheat market didn't have as much influence by these reports. We had December Chicago wheat a half higher at 487 3/4. Kansas City isn't moving very much either. We have the December up 1/4 cent at 407 3/4, and Minneapolis wheat has been hanging on to some fairly small gains, up about 2.5 cents on the nearby December. So, Todd, your thought here on this report. It seemed to catch a few of the traders a little bit off guard as they surged ahead in the corn and soybeans, at least right out of the gate.
Good morning, Marlon. Well, we've been buying the grains for probably a couple of months here now, as we thought that the lows and the bottoms were in. In fact, we've gotten heavier involved the last couple of weeks because you could see something was going on with the price action. And of course, you can see there is some disappointment because how are they going to harvest with the pontoon boat right now? I mean, there's a lot of water out there in a lot of places. So there's a lot of trouble, which could create some shortages, which we're seeing in these reports. And of course, this would be the first event we've had in quite a while that has actually possibly slowed the harvest here. So we'll see what happens. But again, they look like they're going higher. I wouldn't be surprised to see a small pullback back into some support here, but I think we're going significantly higher. I think it's going to be a great fourth quarter for farmers. Considering
the way the large commodity funds were positioned heading into this report and the end of the month, and like you say, there's all kinds of weather problems surrounding the Corn Belt here this year. How do you think the trade is set up for tomorrow then, as you start out on a new clean slate then for October?
Well, I think the big funds have been starting to rotate, and I think probably what you saw here by this knee-jerk reaction higher was them trying to get out of the rest of their shorts. Okay, but I think they have been reversing. I think it's been evident that, again, we watch price action more than anything else because that will dictate where the next move is going to go, because that will take into consideration all of the information that you and I are talking about, but the price will always tell you what the markets actually think of it. And of course, they had started to reverse a few weeks ago, and they didn't want to get it too quickly, but they obviously they got a little bit caught short, I think, into this number, which is why we saw that knee-jerk reaction.
Sometimes reports like this can have a spillover or domino effect over on the livestock trade, and we'll take a look at that in a moment, too. We're talking with Todd Bubba Horwitz right now, and we'll be back in just a moment and do just that. We'll take a look at the cattle and hogs next. Well, we had big moves higher in the corn and soybean trade. Let's see if that means you have a corresponding drop in the livestock. Sometimes that can happen. Let's take a look at what's going on right now with the live cattle futures and the feeder cattle futures. Currently, you have the nearbys basically holding about where they were before that report came out. We have December live cattle down 23. We're at 110.35. And February up a dime at 116.30 on the day. We're just a dime from our high of the session. Let's look at the feeder cattle market. Well, the feeders are seeing some weakness led by the nearby contracts. We have November now down $1.05 at 141.93. So now we're about $1.25 off of our earlier high of the day. About 65 cents off of our daily low. January down 30 at 138.40 right now. And if you look at the lean hogs, now lean hogs open lower. We were over $1 lower on December, and now look at them. 71.25 is the last trade, up $1.40 on the day. That's a huge swing on that December contract on the lean hogs, about $3.50 off of its daily low. We bring back in Todd Bubba Horwitz of BubbaTrading.com. He's located in Chicago, and as you look at the livestock trade, doesn't seem like there's much reaction to the surge going on in the corn and soybean trade. Is it relatively insulated for a while?
Well, Marlon, I think the feeders had tipped off that this report was going to be more friendly or bullish for corn, because they've been lower basically all day long. They really never recovered when fats came back from down a little bit lower and started to get near unchanged. Feeders never moved, so they were kind of indicating that this report might be a little bit bullish. Now, I do think that feeders needed to sell off anyways, so I think this works out perfect timing. I mean, basically, we've gone up parabolically over the last couple of weeks. So a little bit of a pullback is actually more bullish for the market in the long run, and I don't think the price of corn is going to have a long-term effect here. So I think the whole agriculture, the whole livestock protein complex looks great. And I think the reaction in hogs this morning from down over $2 in December to now up on the day about $1.50. They could certainly go up a limit today if they keep going. The whole complex, everything, grains and agriculture, looks great.
We have the quarterly hogs and pigs report that came out Friday afternoon, and we had the all hogs and pigs number 3% higher than a year ago. We had the kept for breeding up 2%, and the marketing's 4% higher than a year ago. It seemed like that added to the pressure on the hogs this morning, but just real quickly here in about 20 seconds or so, do you think that the trade has now gotten past that already?
Yeah, I think basically the 70 level held. I think we go higher. As long as we can stay above and continue to close above 70, we go higher in December hogs.
Interesting stuff. All right. Well, I'm glad you were here. Thank you, Todd, for talking with us about all these latest developments here. Appreciate it. Todd Bubba Horwitz of BubbaTrading.com, right there in Chicago at Redwood, Illinois.
Thank you very much, gentlemen. Appreciate it.